Hey y'all. Just gonna give a few minutes for everybody to kind of filter in. But if you guys want to just type in the chat where you're from and what type of business you're running, that would be great. That way we can just get an idea of who's here. Probably just gonna give about 2 more minutes for people to hop in. Hey. Awesome. All right. So real estate agents, software developers, a wedding officiant. That sounds fun. Esthetician, tax prep, HR. Ooh, photography. That's what I'm gonna do in my next life when I'm more creative. Hi, Celine. I'm in South Florida too. I'm over this hot weather. How about you? Awesome. So we've got some people from all over, lots of great professions. Yes, so humid here. So, my name is Elizabeth Mullins. I have been with Collective for almost 3 years now. I'm a new business advisor here. I'm also an enrolled agent, which just means I have my credentials through the IRS. My background before Collective was helping self-employed business owners with lower their tax liability. So estimated taxes play a very big role in that. So I'm really excited to talk to you guys about estimated taxes, how to lower them, how to help manage your tax liability throughout the year. And you'll have to bear with me. I'm getting over a cold, so I'm gonna probably have a cough drop in most of this webinar. So I apologize for that, and I'll be sneaking sips of water where I can. Also, we do have a discount code for you guys for joining this webinar. If you would like to schedule a call with us, I'll go ahead and put this up on the screen for just a minute here. We'll go over it again at the end of the webinar, but just in case, you have to hop before that point, you can scan this QR code to book a call with somebody on my team that's a business advisor like myself, and then use this code, the OG28W24, to get a special offer, which I believe is half off of your first month with us. And then Sarah can also post the link to our website and the code in the chat as well for you guys. And we will be sending out a replay of this. So, okay, we're at 5 minutes in. I think we can go ahead and safely get started now. So, how to lower your estimated taxes. In this webinar, we're going to talk about self-employed taxes 101, how S Corps can help make taxes less of a burden for you, and why you should start now. How exactly do you estimate your taxes throughout the year, and how can Collective help make taxes a no-brainer for you? And then at the end, we'll have a little session where you guys can ask any questions that you have, and I'll try to answer them to the best of my ability. Just make sure so we can try to keep everything organized. If you can put those questions in the Q&A box instead of the chat, that'll help me and Sarah when we get to that point. So this webinar is for educational purposes only. Nothing contained in this or any related webinars should be viewed as legal or tax advice. Make sure that you're always consulting a professional if you need specific legal or tax advice in operating your freelance business based on your specific situation. So what is Collective? Some of you may have seen us on social media for a while or have been following us, we are the first all-in-one financial platform designed for self-employed people. So what exactly does that mean? And how does that help you? As you know, when you're self-employed, things can be a little overwhelming. You've got a lot of these pesky little bubbles that we see here in this slide that are just kind of floating around all the time. How do I set up my business? How do I estimate taxes, like we're going to talk about today? How do I handle bookkeeping? What about payroll? Do I need that? How do I save for retirement? How do I handle my taxes? Ongoing compliance. How do I get financial advice? There's just a lot of moving parts, and things can feel pretty disjointed. When you're self-employed, you can kind of tend to feel like you're on your own and you don't have any backup. And then things get even more complicated when it's time to make a financial decision. How do all of these pesky little bubbles relate to each other? You're just trying to run your business, and now you've got to figure out, how do my financial reports affect my estimated taxes? And then my actual taxes that are due. How do I get my books to help me with that? Everything can just be, again, a little daunting for you. At Collective, we try and take all of those pesky little bubbles for you and just give you a cohesive plan to run your business. You get all of these different moving parts: compliance, taxes, setup, bookkeeping, financial reports and payroll, financial advice, estimated taxes, and then retirement benefits and planning, all in just one cohesive service package, which we will talk about later. Now let's do a quick poll, and I'm going to take a sip of water while we answer this. What stresses you guys out the most when it comes to your taxes? Let us know. Is it setting up your LLC or S Corp, like that formation piece? Is it the taxes, bookkeeping, or advice? Okay. So let's talk about some self-employed federal tax basics. When it comes to being self-employed, you're generally going to pay two types of taxes. So what exactly are those? First of all, there's income tax. And this is generally, like the slide says, what you think of when people are talking about their taxes or their tax bracket. Everyone kind of has their own marginal tax rate when it comes to income tax. Most of us are somewhere between 20% and 37% in terms of our income tax bracket. When you're self-employed, you also have to pay self-employment tax. And self-employment tax, unlike income tax, is just a flat rate for everybody. And it's a flat rate of 15.3%. And that is going to go towards Social Security and Medicare tax. So when you are a W-2 employee like myself, I'm a W-2 employee of Collective, I'm still paying in to this 15.3%. But when you're a W-2 employee, it's referred to as payroll tax. Payroll tax and self-employment tax are the exact same thing, just with different names. It's that FICA taxes. Like, if you have been W-2 in the past, you've seen that dreaded FICA on your pay stub. So for somebody like myself, half of my FICA tax is paid for by myself and half is paid for by my employer, Collective. When you are self-employed, you have to pay the whole enchilada by yourself because you have no benevolent employer to pay that other half for you. So that kind of helps to explain why self-employment taxes are so expensive. If we look at somebody who owes, say, $15K in Social Security and Medicare taxes, when you're an employee, like we just discussed, you pay 7.65%. So if this is me right here being a W-2, I'm going to pay $7,500 and collective is going to pay the other $7,500. If I was self-employed, I'd have to pay the whole $15K by myself. So that's why they're so expensive and they really add up. So let's look at how taxes work when you are a sole proprietor or an LLC. You've got your revenue, and that's just the money that you earn from operating your business, operating your goods or services, minus any deductions that you have for your business. And that gives you your net income. If your net income is positive, it's considered a profit. If it is negative, it's considered a loss. So you take that profit or loss, and that flows through to your individual tax return. Your business profit then would be subject to self-employment tax, excuse me, at the 15.3%. And then you take the business profit, any other income. So say, you've also got a W-2 job and this business is your side hustle. Take your profit from the business, any other household income, or you file jointly with a spouse and they have a W-2 job, minus any personal adjustments, minus either the standard deduction or itemized deduction. And that's where you come to your income tax, your tax bracket. So that's just kind of how the taxes work for a sole proprietor or single member LLC. Now, what is an S Corp? At Collective, we love our S Corps. So that's what we specialize in. So we're going to talk about that. But first, let's just go over legal structures really quickly. Now, a legal structure, think of an LLC. That's an example of a legal entity that is formed at the state level with the Secretary of State. So again, LLC, a corporation, one of those legal entities. They do require a formal organization process with the state, usually the Secretary of State. They are usually also required to file an annual report, and that just lets the state know what kind of activity is going on with your business and who manages it. It's typically a separate department than the taxing authority. So if you never filed, for instance, like a request for an LLC or a corporation, you're most likely a sole proprietor that's just doing business under your name and social security number. Now, what exactly is an S Corp? An S Corp is just a tax election. They are not a legal entity like an LLC. They're just an election. So the IRS decides how each business structure is taxed. You can ask the IRS to tax your business as an S Corp, which could save you money on taxes. So you can't go from having a sole proprietorship, like we talked about, if you have no underlying legal entity, you can't go from being a sole prop to an S Corp. You have to have a step in between there. That's setting up your legal entity as either an LLC or a corporation. And what that legal entity does is it gives you what's called tax flexibility. So like we see in bullet point 2 here, how the IRS decides how each structure is taxed, that goes into the legal entity. So a single member LLC, just like a straight up LLC, is automatically going to default to being taxed as an individual. It's what's referred to as a disregarded entity. And it just means the IRS disregards your entity and continues to tax you as an individual unless you ask otherwise. And one of those ways is the S Corp election. And the S Corp is just a more efficient way to be taxed. So number one, S Corps don't pay self-employment tax on the business profit, which is huge. And we'll go over in just a minute what that can look like and what the savings potential can be. An S Corp inherently creates an employee-employer relationship between you and your business. So you get to pay yourself what's called a reasonable salary, and that's the savings mechanism with an S Corp, and that is done through payroll. Your employee wages or your reasonable salary are subject to payroll tax at 15.3%. So again, same thing as the self-employment tax, like we just went over. Half of the payroll taxes are going to be withheld from your paycheck, and then half are an expense for your S Corp. Your S Corp profits and wages become part of your personal income, and you pay income tax on both. So here's just a refresher, excuse me, of the sole proprietor or single member LLC taxation that we looked at before. It's just a little refresher. Again, you've got your income minus your business expenses. You arrive at your either net profit or net loss, which flows through to your tax return. You pay self-employment tax and income tax on the profit. So with this structure, all of your income is just characterized in one way. It's going to be the net income from your business. So think of sole proprietorship, single member LLC income just all goes into one bucket, and it is all subject to self-employment tax and income tax at your ordinary income tax rate. Now, S Corp taxation works a bit differently. So you've got your revenue, so the money that you earn from offering your goods or services. And then you've got your business expenses that come out of that revenue. So minus your any business expenses, minus your reasonable salary, and payroll taxes of 15.3%. Then you arrive at your S Corp profit or loss. That still is going to flow through to your tax return, your individual tax return, your salary plus your profit. So with an S Corp, it's a great thing that it is still a pass-through structure, meaning everything still passes through to your individual tax return, and you're not subject to double taxation. So you're not paying corporate tax and then individual tax on top of it like you would as like a corporation, for example. So woohoo for no double taxation. So the profit or loss from your S Corp still flows through to your individual tax return. You're going to pay income tax, again, at your ordinary income tax rate. So plus any other income like we talked about, if you've got a side hustle or your spouse's W-2, minus those personal adjustments, and then whether you take standard or itemized deductions. So what that means, just to explain it in a different way, like we talked about with on the previous slide with the sole proprietor and LLC income, it's all characterized in one way. It's all going into one bucket. Everything is just net income from your business. You pay self-employment tax on that at 15.3%, and you pay income tax, your ordinary income tax rate. With an S Corp, think of your business income splitting off into two buckets instead of one. So bucket one is going to be your reasonable salary. On that salary portion, you're still going to pay payroll taxes at 15.3%. However, on the remaining business profit, that's not on the salary portion. So let's just say 50-50, and we'll go through some specific numbers on the next slide, but just say 50% of your net profit is on your reasonable salary. You still pay the 15.3% on that portion on bucket one. On bucket two, you've got your leftover business profit. That profit is no longer going to be subject to self-employment tax like it is when you're an LLC. Everything is subject to self-employment tax. With the S Corp, it's just your reasonable salary that you pay that 15.3% on, and the remaining business profit is just subject to income tax at your ordinary income tax rate. So here we have an example with some numbers. So in this column on the left, this is where you see a sole proprietor or single member LLC. The column on the right is the same business if it were to be taxed as an S Corp instead. So, excuse me, the businesses are each profiting $160,000. So after their business expenses, this is what they're netting. As a sole proprietor single member LLC, they're not set up to pay themselves any wages. So the amount that's going to be subject to self-employment tax for the sole prop or single member LLC is the entire net of $160,000. Now, the total tax that they're going to pay, total self-employment tax on 160K is going to come out to $24,000. The pass-through profit that passes through to their individual tax return is $160,000. And they're subject to pay personal income tax on this $160,000 as well. So how it works with an S Corp is this person is going to pay themselves a reasonable salary, like we talked about, of $60,000. So the amount that's going to be subject to that 15.3% in self-employment / payroll tax, instead of it being the whole 160K net, it's just going to be that $60,000 that's on their reasonable salary. So instead of having to pay self-employment tax of over $24,000, they're just having to pay $9,000 in self-employment tax. So they're able to save $15,000 just from switching to an S Corp. Now, that remaining $100,000 in business profit is just going to pass through again to their individual tax return. They're just paying ordinary income tax on this instead of self-employment tax like we see here. They're just paying that on their reasonable salary, and they're still, again, paying income tax on the whole amount. So hopefully that helps, seeing some numbers, tying it together a little bit, and just seeing the impact that an S Corp can have on your self-employment tax. And you do still have full access to all the money that your business earns. It's not like you have to try to live on the salary portion alone. Of the remaining $100,000 is pass-through profit. You just take what are called distributions with an S Corp, and it's just a transfer from your business account to your personal account. And you can do that whenever you want or need the funds. Some people do it once a quarter. Best practice is typically once a month at least. Yeah, you can do it once a year, twice a day, however often you need to. And those are just, again, tax your ordinary income tax rate. And again, if you guys have questions, pop them in the Q&A, and I'm happy to go over this in detail later. I know this, when it comes to taxes, all this stuff is very dense. All right, so we talked a little bit about reasonable compensation. How exactly does it work? Well, there unfortunately is no set standard for reasonable compensation. It's what's called a facts and circumstances argument. So I always encourage everybody, even if you don't end up going with collective, please consult a tax professional when it comes to setting your reasonable salary. It's such a gray area with the IRS. They've been arguing about it in court since like the 1940s. So there's a lot of moving parts that go into calculating reasonable comp, and you always want to seek out a tax professional for that. And keep in mind that your salary is a tax strategy, and the goal is to get you in that sweet spot. So we want to strike a balance where you're in compliance with the IRS's general guidelines. You're not going to be raising any red flags, but you're still receiving optimal tax savings. All right. So which business structure is best for you? So an LLC without an S Corp election is going to be best for businesses that are really new, that don't have a lot of earnings, So if you're earning less than about 60,000 in profit per year, you're probably not going to see a whole lot of benefit in electing S Corp status at that point. It's going to be better to just hold off until your net profit increases to that $60,000 threshold. And that's because an S Corp is just a more complicated business structure. You typically will need assistance managing your S Corp, and Collective does want you to come out ahead as far as tax savings rather than, spending all your money in support. We want you to come out ahead. So we set that 60,000 threshold. Also, if you want a really simple, straightforward tax structure, an LLC is going to be better than an S Corp in that regard as well. So if you have earnings of more than 60K per year in net profit, if you're wanting to maximize retirement savings, and if you have enough cash flow to make regular payroll runs, then an S Corp is a great option for you. All right. Now, let's talk estimated taxes. Who exactly has to pay estimated taxes? Anyone who is self-employed that is going to owe more than $1,000 at the end of the year, which is very easy to do, does have a responsibility to pay estimated taxes. So this applies to freelancers, business owners, sole proprietors, LLC owners, or if you even own a share in an LLC. So the basics of estimated taxes are: taxes have to be paid as you earn or receive income during the year throughout either withholdings or estimated tax payments. So the IRS, they want taxes to be pay as you go. So one of the revenue officers that I used to talk to all the time, she would always say, pay as you go so you don't owe. So that's just something catchy that you can remember when you're self-employed. But it's like when you're W-2, I'll just use myself as an example again. Every single paycheck, I have my federal withholdings, right? Money that is pulled out and remitted to Uncle Sam on my behalf. They want that same structure to be in place when you're self-employed. So you're paying taxes in, maybe not on a biweekly basis, but on a quarterly basis. So that way, things aren't getting too overwhelming for you when it's time to pay taxes at the end of the year. You have to make those estimated payments if you expect to owe 1K or more. And if you don't pay enough tax throughout the year, you may be charged a penalty. So there's something called a failure to prepay penalty that gets assessed to you when you're self-employed, or there's late payment penalties. They're not astronomical, especially early on, but it can definitely add to your taxes that you're going to owe when you do file. And if you're not expecting it, it can definitely make a difference. And then if, say, you don't have enough money to cover it when you file, if those taxes do keep accruing year over year, they can become pretty daunting. So again, you may be charged a penalty if your tax payments are late, even if you're due a refund when you file your return. So you can get that late payment penalty. Estimated taxes are done on a quarterly basis. So for the first quarter, you're going to make that payment on April 15th. Second quarter is due June 15th. Third quarter is due September 15th. And then your quarter 4 payment is due on January 15th of the following year. So what about underpayment penalties? So the amount of the underpayment is basically based on the period when the underpayment was due and underpaid. The interest rate for underpayments are published quarterly. So like I was kind of talking about, those penalties and interest continue to accrue year over year. So it's really a smart decision if you can get ahead of, paying those estimated tax payments, getting ahead of the liability. So that way you're not hit with a bunch of penalties and interest. So how exactly do you estimate your federal taxes? So there's something called the safe harbor rule. And with this, you're going to pay the lesser of two options. So you've got either 90% of the current year's taxes. So if you're estimating you'll owe, say, $1,000 in taxes this year, you're going to take that $1,000, multiply it by 90%, and come out with $900. You're going to divide that by 4 because we make those payments on a quarterly cadence. And then you have $225 that you need to pay in each quarter to satisfy this safe harbor rule. Or you can pay 100% of last year's taxes. So say you owed $2,000 in taxes last year, you're going to take that $2,000 and divide that by 4, and then you come up with $500 that you would pay in each quarter. And these just help you, again, avoid those penalties and interest. So even if you owed $2,000 last year and this year you're going to owe, say, $3,000, as long as you're making those quarterly payments that total up to $2,000, you're safe in terms of penalties or interest. Or if you do 90% of the current year's taxes. Okay. How do you estimate taxes based on actual income and deductions? So first, you're going to estimate your AGI, which is your adjusted gross income. This is all of your income coming in minus certain adjustments like your business expenses. We're not going to include those because you're not taxed on those. You're going to take taxes into account. So you're going to multiply your estimated AGI by your applicable tax rate. So AGI times your tax rate equals your estimated tax payment for the year. And then in terms of paying in quarterly, like we did before, we're just going to divide that amount by 4 to determine the amount that you should be paying in each quarter. So say your tax rate is about 30%, right? You can multiply your AGI, say you're going to make like 100K. You can multiply that by 30%, get your estimated tax payment for the year, divide that by 4, and now you know how much you need to pay in on those quarterly dates. And estimated taxes aren't just for the federal government. States have them too. So let's look at estimated taxes as a sole prop versus an S Corp because they do work differently. So as a sole proprietorship, you have 0 withholding through a W-2 because like we talked about before, you don't have the ability to set yourself up on a reasonable salary when you're a sole proprietor. So you have to estimate the amount of income that you expect to earn during the year and pay estimates on the entire amount. So like we just talked about, the method of, estimating on your AGI, or you can do one of the safe harbors. Either one of those would apply here. With an S Corp, because you're paying yourself as an employee, you will have withholdings through your W-2 paycheck that are automatically going to be remitted to the federal and state taxing authorities. You can choose to increase your W-2 withholdings to account for other income earned during the year. If you don't, you only have to estimate on income earned above your salary. So like those distributions, you still have to pay quarterly taxes on those. It's just going to be less out of pocket each year because you will have your withholdings through your W-2. So it does make it a bit easier, makes those payments more manageable. I personally just always love withholding because it's like I never had the money to begin with, so it's less painful to kind of fork that over to Uncle Sam. So starting an S Corp now can help lower your taxes later. So what is it like setting up an S Corp on your own without collective? Again, it's pretty overwhelming. We've got all of the formation pieces. You have to set up again that legal entity, that LLC. You got to get your EIN. You got to file the S Corp election. And then you also have to be registered as an employer with your city and state. And that's so you can get what's called your payroll ID. So that way you can pay yourself your reasonable salary, which again is that mechanism that drives those tax savings. You've got to stay in compliance with the IRS and the state. You've got to file those estimated taxes. You've got a separate tax return that's due every year. So as many of you know, especially if you're filing your taxes yourself, as a 1099, like a freelancer or, a single member LLC, all of your business activity is going to go onto your Schedule C. That's a part of your personal 1040 return. With an S Corp, you have a separate return that gets filed every March that has all the business activity on there. So you have to make sure that gets filed timely. You typically need more robust bookkeeping with an S Corp. So you're going to have to get a bookkeeping software. I know a lot of sole props and LLCs just use an Excel spreadsheet, which I love a good spreadsheet, but with an S Corp, it's just not the most practical option. And then of course that ongoing financial advice. And then there's also something called an accountable plan, which is a major benefit of an S Corp. And it's just an employee reimbursement plan, but like how do I set one up? How do I manage it? Collective can help with all of these areas. So we are a one-stop shop to help you not only set up, but maintain your S Corp year round. We're going to set everything up for you. We're going to dot all the I's and cross all the T's there. We're going to handle your books on a monthly cadence. We'll do all of your bookkeeping. You'll get your financial reports. So you have really good financial visibility. We also are going to do your payroll. We're going to do the taxes for the S Corp. We're going to set up your accountable plan and help you manage that. And you're going to get your own tax professional assigned to your account who you can ask for financial advice. And then we're going to help you with ongoing compliance with the IRS and the state. So again, it's just a much more cohesive experience that's going to hopefully relieve some stress from you so you can focus on your actual business and not just all of these administrative tasks. At Collective, we work with full-time solo entrepreneurs, so businesses of one. If you do have contractors, that's okay. But we mainly work with businesses that are currently sole proprietors or single member LLCs that are already filing as S Corps, self-employed like freelancers who are netting more than 60K per year, and then mental health professionals who can operate under an LLC that don't need, for instance, a professional LLC or professional corporation. So at Collective, you have one login to run your business. So again, it includes all of these different facets, the formation. Under formation, we're going to form your LLC, file your S election, obtain your EIN. We do your operating agreement as well. Bookkeeping, again, is done on a monthly cadence. We do S Corp specific accounting. So no more spreadsheets, no more Excel spreadsheets. You got to have a software for the S Corp specific accounting. We set up the accountable plan and then do the monthly financial reports. Payroll is handled as well. You can pay your contractors and file their 1099s through our payroll system. And then it also includes the payroll tax filings. There's quarterly payroll reports that are due. We take care of those for you as well. And then we also provide guidance on reasonable compensation throughout the year. For taxes, we're going to file that S Corp return for you each year for the federal and state. So again, that return is due every March. Collective takes care of that for you. And then you just get a packet that has like your W-2 in it to prepare your personal return. So your personal return should be greatly simplified by having an S Corp. And then we also calculate those estimated taxes for you so you don't have to do that and remind you of when to pay those. And then as far as compliance, we send compliance reminders, and then you've got your support team of your tax professional and other team members that you can message anytime. So right now, if you are an existing LLC, so if you've had your LLC all year, or maybe set it up earlier this year, Collective can backdate your S Corp election to July 1st of this year, allowing you to have the lighter half of the year taxes and S Corp. So you can get those tax benefits for 6 months of the year and you don't have to miss out. And as far as our costs go, we've got 2 options in terms of plans. They're both inclusive of our full suite of services. So you get everything we just talked about, including the bookkeeping and payroll software. You can do a monthly option for $349 per month. Or if you want to pay for our annual plan, it is an upfront payment of $35.60. It's for 12 months of service. So you do get a 15% built-in savings with this option. And then we have a one-time onboarding fee of $199, which just includes the setup. It includes, getting all of the S Corp filed, setting up the bookkeeping, payroll software, getting the payroll ID, all of that. Our services, again, they include the bookkeeping and payroll tools, and we are 100% a deductible business expense for you. So we are back to the screen again where we started in the beginning here, just in case you guys, after hearing this presentation, want to schedule a call with a member of my team so we can talk a little bit more about your specific situation and see if an S Corp makes sense for you. You can use this QR code to schedule with us and then use this discount code for the webinar today. And I will leave that here. And let's look at the questions. Okay, so Sarah, I cannot see the Q&A box again. If you can copy and paste the questions. Okay. All right, so let me take a sip of water real quick. So how do you get taxed on an LLC if your net is negative? So if your net is negative, then that's just going to flow through to your personal tax return as a loss. So it will lower your taxable burden if your net is negative. And an S Corp wouldn't make sense in that case. Can a rental property be in an S Corp? Yes, it can. Now, there are certain rules around rental properties. Not all business activity when it comes to properties is considered active income. Some of it is considered passive income. So it depends on what type of business activity you're conducting with that rental property, and whether or not an S Corp would be beneficial would be determinant on whether it is active or passive income. Okay. What do you do if you start with an S Corp and then earn more than 60K a year or whatever amount later? Do you change to a C Corp? Yes, I'll answer it. You can catch it on the replay. So Robert, to answer that question, you definitely would want to talk to an advisor about whether a C Corp would make sense for you. The main reason I would personally recommend a C Corp would be if you're looking to raise outside funding. So if you're looking to really fundraise to grow your business, if you're looking to have more than 100 shareholders involved in the business, and looking to issue multiple classes of stock, like common stock versus preferred stock. Antoine, yes, we will send out a replay within 24 hours. You can have this penalty issue if you or your spouse has wrong W-2 settings or if you have multiple jobs. Yeah, it can mess things up as well. No, we don't have a webinar. This webinar is not on how to file the 2553. The total in the example that we went over was the net profit, the 160K. So yes, right now we are backdating Peter to July 1st. And that's because the retroactive S Corp elections are a large administrative burden. So there's a lot of moving parts that come with that. Again, we have to register everything and get the payroll tax ID. We also have to run a payroll catch-up and rebuild the books. So at Collective, we do have boundaries for how long we will backdate those S Corp elections. We split the year in half. So from January to the end of June, we'll go back to January 1st. From July 1st to the end of October, we'll go back to July 1st. Victoria, it can be backdated further back. I believe the IRS actually has a period of about 3 years where you can backdate your S Corp election. Now, keep in mind, if you did want to do it for prior years, like say you wanted to go back to 2022, like you made enough money and you're like, dang, I could really like see some major savings if I did this. You would, number one, have to find an accountant who would be willing to go back that far for you. Because like I stated, it is a large administrative burden. And then you would also have to amend your 2022 and 2023 tax returns. So an accountant would likely charge a hefty sum to go back, especially many years. It probably wouldn't be quite as pricey to go back to the beginning of this year, but it would probably still be a couple $1,000 because again, it's just a lot of admin work. Is it 80K to work with Collective gross or net profit? Great question, Michelle. The 60K minimum recommended threshold is a net profit. Brendan, it can be, just not through Collective. We will only go back to July 1st, but if you find an accountant to backdate it for you back to, anywhere back to January 1st, you can absolutely do that. And then if you want Collective to help you manage the S Corp, you can just provide us with the copy of the S Corp election when you sign up. Okay, I've registered my LLC in one state and now live in another state. Where would I file the S Corp in the current state I live or where my business is registered? That's a great question, Sarah, and something that does come up a lot. So typically you want your LLC and your S Corp to be registered in the state where you are living and working. Otherwise, if the state ever decides to audit you and sees that you do have self-employment income, but you don't have a business registered there, that's considered to be a legally transacting business in that state. They can fine you, issue penalties, interest, court fees, and they can eventually suspend your right to do business in that state until you register your business there. So it really depends on your situation, but typically you would want to either redomesticate the business if the move is a permanent one, or you could do a foreign registration of the business in the other state and then file the S Corp election. Gets filed with the IRS. Only certain states, a few states recognize the S Corp. Most of the time they don't, and it's just filed with the IRS. But if you are thinking about this, if you want to set up a call with one of our advisors, they can give you more specific info. or info to your specific situation. Okay. If your business is not profitable yet, you haven't made a profit or taken a salary, is S Corp still advantageous? You'd want to hold off, Ren, and just until you're earning a profit. What if I already have everything set up and would just like to learn how to fill out and file the form 2553? Celine, so you may be able to find a guide online. If you want to email me at E as in Elizabeth, and then my last name, Mullins, Mullins, at collective.com. I can see if we have any resources I can send you via email. Okay. How do we elect S Corp? So, Rose, you have to do that by filing Form 2553 with the IRS. Can you go back in time and set up a retroactive S Corp if you have not filed in a few years? As long as you have your LLC established, that underlying legal entity, you can go back for 3 years and do the retroactive S Corp election. Keep in mind with that, you do have to submit a reasonable cause argument that explains why you didn't file it in a timely manner. And the IRS does more heavily scrutinize those requests for the retroactive S Corp elections if it is multiple years, especially if you haven't filed. So they do have the right to say no to that. But you can certainly try, and then you would have to file S Corp returns for those years as well. So you'd need to make sure that you had enough money to pay the payroll taxes on hand for those years. So you would be best to work with an accountant to help with that. So you could probably reach out to a local CPA and see if they can advise on whether or not it would be worth it, and see what they would charge, and kind of do like a cost benefit analysis for how much you'd save versus how much they charge to do all that work. Okay. Scott, transfer of money on a regular basis from business account to personal account, blah, blah, blah. Yes, so that is over and above payroll. Your reasonable salary, those are just the distributions that you're paying yourself, and you can take those whenever you need the money, and those are just taxed to your ordinary income tax rate. You do not have to pay self-employment tax on your distributions. If I have 2 single member LLCs that must remain separate, can Collective help me figure out the best way to organize these to save on taxes? Is there a holding company strategy that might work? So yes, we would love to talk to you about your businesses, and see if there is a way, for you to best save on taxes with these, if an S Corp might make sense for one or both of the businesses. At Collective, we don't work with holding companies, at least right now, because they are just more complex by nature. And just at our price point, we kind of just try to keep everything very streamlined. So right now, we aren't working with holding companies, but some of our members, we do have quite a few members that have multiple accounts with us if they have multiple businesses. Hi, Cassie. Oh, great. May of 2024. Perfect. Yeah. So if you want to learn more, book a call with one of our advisors and they can talk to you more about that. Okay. How to keep up with your information for taxes. What is the correct way to bookkeep? Great question, Alexandria. If you are just kind of starting out and you have a single member LLC or sole proprietorship, honestly, you can just keep an Excel spreadsheet, or there's certain softwares that we've heard really good things about. I've heard really good things about FreshBooks. I've heard good things about Wave. Those would be great options when you're just starting out. Melanie, Sarah's going to send the recording out within 24 hours. Okay, what if we have an LLC in place, have EIN number, QuickBooks software, have been filing self-employed, but now profits are looking like needing an S Corp? How do we elect an S Corp? How much for Collective to do this? Okay, Rose. Yeah, I mean, it sounds like you would be a great candidate for an S Corp. I would schedule a call with one of our advisors to see what they think, and yeah, just take it from there. They can go over everything with you. Okay. What if I applied for an S Corp 2/14/23 for effective date 1/1/23, but the IRS approved it for 1/1/24? I functioned as an S Corp all last year, and I've called multiple months and asked for a fax. I sent 3, and they sent a referral beginning of August. They said call back in 30 days. Yeah, so that would just mean that they denied your S Corp, your request to backdate that retroactive S Corp election to 1/1/23. If they said it's just approved for 1/24, that just means that they did not accept your request. So I don't know why, though. That's weird. If you applied for it in February to go back to January, multiple months and asked for a fax. I sent 3, and they sent a referral. Yeah, I would just keep working with them, and see if there's anything that they can do to. That's so weird. Anything they can do. You may have to submit like another reasonable cause argument and just state that you did file your request for an S Corp in a timely manner, because you typically have 75 days from the beginning of the year. Like, that's the technical cutoff. You can request it further back than that, but within that 75-day period, I haven't heard of them not approving it. That's really weird. I'm sorry that happened to you, Lauren. I would just maybe submit via fax another like argument stating, and you could maybe hire a CPA, or if you have a relationship with a CPA to help you with that, stating that you did file within the 75-day period. Peter, I would schedule a call with one of our advisors to talk to them about, your specific situation. You can give them more info on what you've got going on than I can really help with right now, unfortunately, since this is just like kind of a group setting. But they can do a one-on-one call with you where they can talk to you about how much income you've made for the year, what months your income has come in, to see if they would recommend, either just doing half of the year, trying to find somebody to backdate for the whole year, or, holding off until 2025. Stephanie, right now it is, it's just a bulk services package. We don't have any a la carte services at the moment. For withholdings, how does this get to the IRS from the S Corp? Through the March return, through quarterly payments of some sort? Great question. So the withholdings are done via a payroll software. So at Collective, we partner with Gusto. So it's Collective Payroll powered by Gusto. Gusto takes the withholdings and they remit them to the IRS and the state for you. Okay, what if you made 160K on W-2 and then 20K on self-employment income? Taxed at 24%, so I overpaid. Oh, but what if my income outside the business is higher? Is it still worth it? So PJ, if you have really high W-2 income, then an S Corp may not be worth it. And that's because of the Social Security cap. The Social Security cap for this year is $168,600. Anything that you make over that $168,600 is not going to be subject to self-employment tax. Social Security makes up the bulk of self-employment tax. It's 12.4%. So you inherently are just going to be saving that anyway because of your high W-2. Most of your savings with an S Corp would just be the additional 2.9% in Medicare tax, which may be $1,000 or $2,000 for your specific situation, just doing the mental math in my head. So I would say, at 160K W-2 and only 20K in self-employment, it's not worth it. And even if your self-employment income is higher, it still may not be worth it. And also, it's unfortunate because when you do have that situation, you can end up overpaying on the employer side into self-employment tax. And, when you overpay on the employee side, you get a refund when you file your taxes. When you overpay on the employer side, you don't. So if you have a high W-2 income, I wouldn't necessarily recommend an S Corp, but you can always schedule a call with one of our advisors. Again, talk to them more about your specific situation and they can give you more tailored advice. Okay. Just received our letter stating we can start filing as an S Corp beginning January 1st. Woohoo! So are we out as far as backdating? I put a reason for exception on the return, but apparently it wasn't accepted. So yeah, if you got the letter stating that you can backdate to January 1st, like you can begin filing as of January 1st, that means your 2553 was approved as to 1/1 of 24. So if you do sign up with Collective, we would backdate everything to January 1st, including like your payroll and your books. So I would definitely schedule a call with one of our advisors so you can get on board and get everything organized ASAP. Michelle, we work with our own bookkeeping software. Great question. So we have our own proprietary software. It's called Collective Accounting. We actually used to work with QuickBooks when I first started a long time ago, but we built our own software within the past year and a half, 2 years. So we did, some pattern recognition to see what most of our members' needs were with their bookkeeping software. And just kind of, took the best of the best and built our own. We do have some demos. There's a live demo on our website of Collective Accounting. You can take a look at that, or if you email me at emullins@collective.com, I can send you some demos as well. Scott, if the S Corp money passes through to the personal tax return, why is there a need to file a separate tax return on the S Corp in March? Yeah, I'd love to know that too. It's because the IRS doesn't make anything easy. The return in March is just simply an informational return. It's just a requirement that the IRS has. There's no taxes that you pay on that return in March. You don't pay any type of corporate income tax. Again, it's just an informational return. Everything still flows through to your personal taxes, but there's a requirement. So we file it for you. Victoria, yes, I've answered this a couple times. I think just gonna give a shout again because I know a lot of people have this question. It can be backdated further than July, potentially, just not at Collective. You need to submit a reasonable cause argument, and that would need to probably be done through an accountant. If I have an LLC for 3 small shops and now looking into getting rental income, looking for a property now, do we get an LLC for it even if we have no property yet? Can this property rental income be added to the current LLC? Great questions. So you typically do want to set up an LLC for your rental properties. That way you're just protecting yourself, moving that liability protection. So that way if anybody, like say you rent it out and somebody comes after you, they can't come after your personal assets. They would just be able to come after your LLC. So number one, you're protecting yourself. You can either set it up now or you can wait until you have the property. And the rental income, depending on the nature of your current LLC, you potentially could add it. You typically want to keep an LLC. You want to set it up for that particular industry because there's something called an NAICS code. And again, it's NAICS, and they're business activity codes, and you can Google what they are. If you have a business activity that is not congruent with your NAICS, then the IRS audits you and they say, all right, Rose has a business where she's set up as a consultant or coach, but then she has all these expenses for a property that she's renting out. That's not congruent with how her LLC is going to be set up. So we're not going to allow these expenses. She's going to have to pay taxes on these, which obviously nobody wants. So just to be safe, I always recommend keeping everything separate. But yeah, you can Google those NAICS codes and see if there's anything that would work for both. Do you have any resources on bookkeeping management? Yeah, so Um, if you look at our website, we have some information on there. Or you can, download one of the apps to do bookkeeping, like FreshBooks. Wave is great for invoicing. Xero, Xero, is also a great bookkeeping software. And I believe they have like a Xero 101 YouTube channel that just kind of shows like different functionality of their software, but it gives you some good ideas. Why do you set 60K as minimum profit to consider changing to S Corp from LLC when you not still see savings at a lower profit? So potentially you would, Scott, but we factor in the cost of collective's fee. And like I said, we want our members to come out ahead in terms of tax savings. So 60K is like typically kind of the point where they like break even, so to speak, or start seeing a little bit of savings after collective's fee is factored in as well. Rose, it's the 2553 is the S Corp election form. Alexandria, yes, you file personal taxes separate from your business taxes as an S Corp. So you would still file your 1040 in April after filing the S Corp form, the 1120S in March. You get a W-2 and a K-1. And the K-1 is just a record of those distributions. And you just pop those into your personal return. If your personal tax situation is pretty straightforward, most of our members just use like TurboTax. Yes, Peter, it can be backdated further, just not at collective. Exactly. Does that have to be in the same state as their rentals? Steve, typically, yes. You would want that in the same state. What if your business has not received any income or filed a federal tax return? Then you probably want to hold off a little bit, Celine, until you know that your profit's going to be over that $60,000 threshold to make sure an S Corp is going to make sense for you. Do we help with just filing the S Corp election form? No, we don't have any a la carte services to where we just would do formation. We do the formation and all the other services as well. Okay. How long do you have to be an LLC before you can be an S Corp? So, Adriana, there's no real like time period for how long you have to be an LLC before you can be an S Corp. It really just depends on, again, the cash flow, like how much money your business is making, all of that. So as long as you are making over 60K in net profit and you have the cash flow to run payroll, it doesn't matter how long you've been an LLC. We have some people that are, just starting out that they know, like say, like, hey, I'm going to be consulting. I already have contracts lined up with 3 clients. I know that I'm going to be over the 60K and they haven't started yet. And we just start up an S Corp for them immediately if they're confident they're going to be over that. Okay. If you are reasonable, or if you're an S Corp, you pay yourself a reasonable salary via W-2 and take minimum draws, will the profit left at the S Corp level still be subject to ordinary income tax? Yes, that's a great question, Serene. So there's no benefit to leaving a bunch of money in your business bank account as an S Corp because it is a pass-through structure. The money that you earn is going to be taxed in the year that you earn it, regardless of when you distribute it. So even if you held it in your business bank account until 2030, you'd still pay taxes on it this year. So we just recommend taking the distributions, and then from there, like if you don't necessarily need the money, put it into a high yield savings account or start a retirement account, because leaving it in the business bank account just, it's not really doing any favors. Do distributions have to be recorded anywhere? Yes, Rose, those are recorded on your Schedule E of your 1040 tax return. Do you work with sole proprietors that have been audited by the IRS? Yes, we do. Let's see. Oh, Sarah linked some information on bookkeeping. I know you had some questions on that, Michelle. So hopefully that will be helpful to you. Thank you, Sarah. Okay. If I operated as a sole proprietor and in the back half of the year, I'm expecting a large increase of income, can I still create an LLC and backdate the 2553 for the beginning of the year? I plan on taking W-2 for the rest of the year at a reasonable comp. For my business, I have a bookkeeper and we'll have financials in place. We'll be able to backdate it to January, so I'm being recognized as an S Corp for the year. Great question, Joe. You can only backdate your S Corp election as far as your LLC formation date. So like we talked about in the beginning, sole proprietors don't have tax flexibility, which means they don't have the option to choose how they are taxed. So you can't go from sole proprietor to S Corp. You have to have that LLC, that eligible legal entity in the middle there as like a stepping stone. So you can't, the LLC, the S Corp election cannot predate the LLC formation date. Okay. Do you have to pay estimated taxes on distributions? Yes, Sarah, you do. Again, it's going to be a smaller amount because you will have some withholding through your payroll. Okay. And then somebody had asked if S Corps affect gross receipts tax. And yes, so the S Corp's gross receipts are its total revenue received from all income sources during an annual accounting period. So it's not reduced by any costs or expenses. So hopefully that helps. And yes, Alexandra, you would set up payroll for yourself as the business owner. You would be required to pay yourself that reasonable salary. And I would definitely do that through a payroll software. Manual payroll is a complete nightmare. And I don't wish that on anybody. I've done that in the past years ago. Gusto is a great payroll software. Again, that's who we partner with. They're really affordable. Their customer service is unmatched. So yeah, I would definitely recommend them. All right, I think that's all the questions. Thank you guys so much. If you hung around to the end here, please, I encourage you to schedule a call with one of our advisors to talk more in depth about your personal situation. And thank you so much for attending Collective's webinar. I really appreciate it and hope to work with some of you guys soon. Thank you so much. I appreciate it. Bye.